Don't put off the conversation. Now is the time to take action. When the window closes, it might be closed for good.
This particular strategy was for the mom and dad investors, and government has kind of taken that.
This change is killing ambition, not actually affecting the affordability as that's being presented.
It is not a great outcome for the mom and dad investors.
I believe productivity should have been the focus, not property, CGT, and negative gearing. Changes always happen, but you just do what is best for the current climate.
Welcome to the Investor Seat. I'm Amol Khuntale. I'm going to be straight with you. If you own an investment property, if you're in trust, if you've been thinking about buying through your SMSF, the rules just changed. And I don't mean a small tweak. I mean the biggest overhaul to Australian property policy in decades. In the last 6 weeks, the government has been scraped the CGT discounts that's been around since 1999. They have quarantined negative gearing, so your rental losses can't be offsetted against your salary anymore. They put a new minimum tax on the family trust. And days ago, they did a deal with the Greens to ban your SMSF from borrowing to buy your residential property. Gone. My phone hasn't stopped ringing. My clients are confused. Some are panicking. Some don't even realize if it affects them yet. And honestly, there's so much misinformation flying right now that I needed to sit down with someone who actually understands the legislation, not the headlines, the actual law, and break it down properly. Sidney Cachuela is the founder of Lucent Advisory Group. He's a chartered accountant who specializes in property structuring, tax strategy, and SMSF setup. His job is to make sure investors are structured correctly before they buy, not scrambling to fix after the government changes the rules. Today, we are going to pull apart everything that's changed, what it actually means, who it affects, what you need to do right now, and what strategies will still work. This might be the most important episode of this podcast. Let's get into it. Sidney, before we deep dive into the policy stuff, and we got a lot to cover, I want people to know who they're listening to. You built Lucent Advisory from scratch. What made you go out on your own instead of staying at the big firms?
Definitely always been ambitious to help SMEs, property investors get ahead. And, working in a big firm, sometimes the legacy and the size can be a detriment to the impact you can have with the individuals. So going out on our own allowed us to create more impact and help more people. So that's what we love to do at Lucent Advisory.
Amazing. Your firm's tagline is stay one step ahead. That's pretty relevant right now. When you first saw the budget announcement on 12th of May, the negative gearing and the CGT changes, what was your genuine first reaction? Not the professional one, the gut reaction.
I was absolutely taken aback. Huge surprise, massive changes. I thought that the budget, I understand that it was around property and demand and all of that, but given the state of play that Australia's in, the economy, I felt that the budget should have been more focused around productivity, especially with the significant pushes with AI and what's happening like from a global standpoint.
Yeah.
I believe productivity should have been the focus, not property, CGT, and negative gearing.
Yeah. But there were a lot of news about the CGT before the budget. But suddenly, now days ago, LRBA ban dropped. Were you surprised or did you see that coming?
That was definitely a fast ball. And it's interesting that that deal struck between Greens and Labor.
Yeah.
From the first announcements, 12th of May, we were like, okay, this is something that we can handle. Thank goodness that they didn't touch SMSFs.
Yep.
So we thought we were, the industry and our clients were clear from that impact.
Yep.
But that dropping, the SMSF bans on limited recourse borrowing arrangements was, it was a surprise.
Yeah. I've seen a lot of negative sentiments in the market.
Mm-hmm. Absolutely. Like I think given the window is a 45-day from Royal Assent, and Royal Assent's due
2nd July?
2nd of July, around that time frame. So that takes us to mid-August. So a lot of our clients, especially the property investors getting into multiple investment properties, they're talking with their brokers, they're talking with their buyer's agents. Can this be done? And we believe at Lucent Advisory, we can get it done. We just need everyone to get in touch before 10th of July to make sure there's enough time to get the foundation correct and the setup. and deliver on that transaction.
Oh, perfect. Fill in the blanks. Finish this. The biggest mistake property investors make with their accountant is
working with an accountant that doesn't have an A team or a network. An accountant works great with a good network because an accountant solves one part of the puzzle. But to get a great outcome, you need the broker, you need the financial advisor, you need the buyer's agent, you need a whole range of different expertise to make sure that nothing gets caught in the wayside.
Yeah.
So to answer your question, definitely the mistake is working with an accountant that is looking only at a silo and not looking at the broader picture.
Yep. No, perfect. Let's start with the bomb that dropped this week. The government did a deal with the Greens to ban the SMSF from borrowing to buy the residential property. Sid, in plain English, what does this actually mean for the person listening right now who's planning to buy a property through their SMSF?
Because SMSFs is the most tax-effective vehicle that we have in Australia, with CGT assets being held over 12 months at a 10% tax rate, that far outweighs anything held personally. And especially upon retirement, 0% tax on any sales of assets, which is incredibly powerful. And property is an asset that grows the right property.
Yep.
Having the right property is expected to grow substantially over a 10-year, 20-year period, which is what super was created for, long-term retirement savings.
Yep.
So this change, especially if an investor enjoyed and is interested in property and has a great feel for it, you can no longer borrow to buy property within SMSFs. And that just applies for residential.
Yep.
Luckily that they didn't touch commercial
as of now
this time. But so it's a huge impact.
Yep.
And it's interesting that, even the Greens mentioned that only 1% of Australian residential properties are held within an SMSF. So it's only targeting a very small portion. So it just begs the question, what impact were they trying to achieve from this change? And, Peter Burgess, the CEO of the SMSF Association, spoke that they hadn't been consulted about this change. So if these changes are being pushed through so quickly and, we're not consulting with the relevant industry bodies, what is the purpose? Have they considered the wider impact it'll have?
Yep.
So ultimately what this means for the investor is it's closing that capability to get borrowed, to buy property with borrowed funds in an SMSF.
Yep.
So that's quite significant.
I need to tell the audience something from the broker side. SMSF lending was already very complex. The rates were higher, the LVR was lower, the compliance was a headache. But for the right client, it was really a good, powerful strategy. I've settled millions of dollars in SMSF in property loans. That pipeline will now be gone. Said the SMSF property lending genuinely was a good strategy for most of the people, or were too many people pushed into it by the spruikers?
I think getting the right financial advice around the use of an SMSF is very important. Ultimately, what I think are the key factors that make buying property in an SMSF so powerful is, one, you're getting the right product. You can get a property in an underperforming place that has no future, and no matter how good the structure is, if there's no gain, there's no real tax benefit. So I think spruikers need to be careful with. I think having the right product, being the right property in the right place, having the right advisors for the financing side, making sure that it's serviceable, that it's suitable for purchase, and working with the accountant to make sure that holistically, as a family, SMSF plays one part of the bigger picture.
Yep.
And bringing that all together, it's important that you get the right advice from each expert.
Yeah, it's a highly regulated industry. And it's a retirement fund as well. So we want to make sure that your property grows in value, your super grows in value, right?
But there are downfalls, there are pitfalls, there are mistakes, there are traps that happen. Getting the wrong advice.
Yes.
We've seen cases where a BA is recommending property which isn't a single acquirable asset,
Yep.
which is an important factor for an SMSF. Otherwise, it breaches the rules and then it becomes non-compliant.
Yeah.
So working with players that have worked within SMSFs is super important.
Yeah, absolutely. Cool. So the government says the existing LRBAs are grandfathered and there's 45-day transition. Walk me through this, what exactly this means practically. If someone has exchanged the contract but hasn't settled, are they safe? What about someone who's in the mid-approval with me right now?
So the 45-day window takes us to mid-August. Effectively, as long as the contract is signed before that date, it's going to meet the time frame,
Right.
and they'll be able to get borrowed funds for the property.
Yep.
But definitely don't rush into it. Don't keep it to the last minute,
Yep.
I should say, and start the process now if that's really your consideration. But it is tax effectively the best vehicle. So if you were thinking about it, it's sped up the timeline. And luckily, the grandfathering, if you have an existing property with borrowed funds in super, thankfully that's untouched. And, luckily as well, the commercial side's untouched as well. So that is a great benefit for business owners that might run their business out of the premises, and then they're keeping the rental income and the tax benefits within their own ecosystem.
Okay. So hypothetically, if the deadline is 15th of August and if someone signs the contract on 14th, they are safe.
So far, of what I can tell, yes. Don't hold me to it, but that's the working idea at the moment. The pitfalls that we tend to see that can hold that up is going to be the rollover into super. A lot of operators can get that wrong, which rejects the super fund rollover, which delays the process. So making sure that you're working with an experienced accountant for SMS setups is going to be important to meet that deadline.
Right. Okay, cool. So here's a big strategic question. Commercial property LRBAs are still allowed. SMSF can still buy residential properties with cash. SMSF can still get concessional tax rates. So what strategies still work inside SMSF after this ban?
So we like the commercial property play. You can still get borrowed funds for those instances. And usually most business owners use it as a way to get rental income into their super fund at a lower tax rate, but also benefit from the long-term growth of that commercial property. The only important thing there is that the rental income needs to be at arm's length, market rate, so we don't breach any rules. But as you said, buying property within a resi property within an SMSF with cash is still on the table.
Yes.
So, but that's only going to affect people with balances $1 million plus.
Correct.
But you really do cut out anyone that has a lower balance. Most balances we see 200K to 500K.
It's your mom and dad investors, right?
The mom and dad investors are the ones that are getting cut out.
Yeah.
So it's not a change that is helping those that are trying to get ahead.
Yep.
And really this change is killing ambition, not actually affecting the affordability as that's being presented.
Yep. No, perfect. So as we said, that the government says that less than 1% of residential properties were borrowed through SMSF. If that's true, does this ban actually achieve anything? Or is it just a political theater to get the Greens' voice?
Yeah, I got to be careful with how I approach that question. I think, being 1% of all resi property being held within SMSF, the impact is little, right? But the impact on the other side of the coin, allowing mums and dads to get into property through their SMSFs, that's the biggest impact. And as we said, there wasn't much consultation with the public or with relevant organizational bodies. And it's quite interesting that this was such a big push. Like that initial budget from 12th of May was just CGT, negative gearing. Thankfully, we were praying that it wouldn't touch super, but now it has. So it's a real kick in the guts.
Yep. Sid, let's move to the negative gearing. There's so much noise around this. Can you explain me in a plain language what actually changing for investors who buy the property after 12th of May 2026?
Negative gearing is an effective strategy for high income earners to bring their taxable income down. And allow them to get into more properties or increase their borrowing capacity. Because of that change, negative gearing has been grandfathered, which is good. So anyone with established properties benefiting from negative gearing, that's going to stay. Then if you've bought a property after 12th of May, only negative gearing applies up till 30 June 2027.
Yep.
So a quarantined window. So that has created a bit of a holding pattern. Do I buy now or do I hold off? Because from 1 July 2027, you do get negative gearing, but on new builds.
Yep.
And what does qualify as new build? So a property that no one's lived in previously, or a knockdown rebuild where you're increasing the size of dwelling.
Okay.
So those are the two key things. And I think that is going to influence the types of properties that investors are going to get into in the new financial year.
Yes. What if this law doesn't get legislated?
If this law doesn't get legislated, I think it's just put a pause on people buying, but it means there'll be a rush back into it, But what is your feel on the percentage that this law will get passed or not? Just a question to you.
Again, it's just, what I personally feel is the properties which are expensive properties, over $1 million are going to be impacted because those are the people who are buying it for the negative gearing purposes. The usual investors which buy something around 500 to 700K, they're still buying because they're buying in the trust structures, company structures, which you don't get negative gearing in these particular structures anyway.
Yeah.
So that particular market, I don't think it's going to be impacted as such.
Yeah. Because the negative gearing factors, it might disappear. People that have always had the buy and hold strategy are less impacted because they're not looking at that aspect.
Yep.
They're looking for that capital gain in the long term.
Correct.
Which is why SMSF was such a strong play as well.
Yeah. No, perfect. So the government keeps saying now that new residential dwellings are exempt from the negative gearing quarantine. But that term is undefined in the legislation. How is an investor supposed to make a decision right now when nobody knows what actually the new build means?
Yeah.
Can you explain more on that?
There's been a couple of comments around that. A new build meaning no one's lived in it previously, or they have an established dwelling, but what they can do is knock it down and rebuild, but it has to have more dwellings than previous.
Okay. So if someone buys a property on 13th of May, but they knock it down, build a new dwelling, which is a little bigger dwelling, they can claim the negative gearing.
Potentially.
Okay.
We'll have to look into the finer detail on that. That's the case that I haven't looked into, but no, that's a great point to have because the 1 July 2027, that's when it says new builds. So I think even new builds from 12th of May up till 30 June 2027, it's still quarantined. It's still quarantined.
Okay.
Yeah.
Okay. That's great. So from the broker seat, here's what I'm seeing. Clients who are negatively geared on the existing properties are suddenly asking whether they should sell. Others are pausing purchases because they don't understand the new rules. What are you telling your clients right now?
Right now, we're telling clients that changes always happen, but you just do what is best for the current climate. So if the environment's set in a certain way, there's always going to be an optimal structure and optimal way to set things up. So we're having deeper discussions on not just the property side, but maybe the family has a business. Maybe there's retired parents. Maybe there's siblings on lower income tax brackets. What we take is an approach that looks at things holistically. How can we work as a unit, a family unit, to get better outcomes? And which is why that sits very close to our philosophy at Lucent Advisory, saying one step ahead is not just looking at silos, but working with a broader team to get greater outcomes.
Perfect. Let me play devil's advocate. Some people argue negative gearing was always tax fraud that benefited the wealthy. Others say it's a backbone of Australia's rental supply. As an accountant who works with real investors every day, who's right?
I think it does help out the middle class, on higher income income tax brackets, but it hasn't really impacted those on the other sides of the spectrum, like the lower income, but also the especially rich. They're using different strategies. They're not they're not basing their strategy around tax.
Yep.
They're looking at wealth planning, succession planning, whereas the changes in negative gearing is mostly impacting the middle. And the middle is such an important part of the economy because the middle is what employs 41% of the Australian workforce.
Yep.
So I think really the budget and the changes and what they've done should really be focused on supporting that middle that's supporting the rest of the Australian backbone economy.
Yep. So earlier we used to say that, hey, for the first couple of properties, buy it under your personal name, you'll get a little bit of negative gearing, focus on the capital growth focused asset. Now, because the negative gearing is completely abolished for the existing builds, how would you tell your clients what should be the right structure to purchase from the get-go?
Because negative gearing allowed clients to somewhat maintain their borrowing capacity too, to get into properties 2, 3, 4. But now that negative gearing is gone, how do you preserve that borrowing capacity? And that's where we work with clients to consider trust structures, company structures, and SMSFs. But each of those entities have different pros and cons. So it really depends on your 5-year goal. What is your family composition? What's happening with your financials, assets, and income?
Okay, great. Now, someone who has owned the properties before 12th of May, which are grandfathered. So if you already own negatively geared property, nothing changes for those ones. But what about the renovation extension? So if someone spends 100K for renovating an existing property, does that change the negative gearing treatment?
If it's an established property, as you continue to develop and renovate, that still comes under the old rules because it's not part of a new build. It's not part of anything else. Those are thankfully going to be grandfathered. So renovations, yes. So if $100,000 goes into the renovations, certainly there's going to be tax deductions available, especially depreciation over the lifetime of those assets.
Right. And if we use the equity from your owner-occupier to renovate a property, which is bought before 12th of May, can they still claim all the negative gearing?
Well, if this is for owner-occupier?
It will be for investment property.
For an investment property?
Yep.
Oh, so they'll get, they're taking out from their owner-occupier,
Correct.
investing it into. So yeah, for the investment property side, if you're investing into enhancing the property and it's for profit-making purposes, and it's an established property, those deductions, those expenses should still form part of that negative gearing strategy.
Okay, perfect. Let's move on to the CGT, which is a big one. So now the CGT changes. This one is what most people don't fully understand. The 50% CGT discounts is now replaced with the CPI indexation from 1st of July 2027. So Sid, for someone who has bought a property in 2025 and now they sell it in, say, 2032, walk me through exactly how the capital gains will be calculated under the new system.
Under the new system, it's about indexation. So that's effectively inflation.
Yep.
So it'll track what will happen from FY27 till the sale date of FY32. The new rules actually benefit if the inflation market is high.
Yep.
Because then the difference is going to be, the gain is going to be less than if the inflation was lower. In a couple of scenarios, the 50% tax rate will be more effective if the inflation during that time frame is low. I know it's influencing a lot of people whether to sell now or hold later. But say on a $500,000 gain, if it was under the old rules, well, firstly, let me backtrack. From 1 July 2027, they're going to have to do a market valuation of that property.
Yep.
That way they can assess the true CGT outcome. So on a $500,000 gain, if we're using the old rules, then you'll get that 50% tax concession, which will bring the gain down to $250K. And that $250K will form part of your taxable income at your progressive tax rates.
Right.
Whereas with a 30% minimum tax rate, they'll do the gain on what the value is when you sold it versus that the 30 June 2027 value. and calculate the CGT based on that. But it really, effectively, it's going to be what the inflation rate will determine who's the winner in that outcome.
Yep. Tell me about this 30% minimum tax on the CGT. So explain me what exactly this practically means. So if an investor is on, say, 32.5% tax rate, does this mean the minimum tax effect affects us? Who does it actually hit?
It's going to hit those with a lower income.
Yep.
So because it's a 30% minimum, there's no limit. It goes limit to the highest taxable tax rate, but it's going to take out, the losers of that change are going to be the ones that are on 20% or 30%, under 30% tax rate. But for anyone above that, there's not too much of a change.
Family trusts are getting hit too. A new 30% minimum tax on discretionary trust from 1st of July 2028, aimed at income splitting to low tax beneficiaries. Fixed trust and widely held trust are still excluded. There's a window to restructure out your discretionary trust with rollover relief from 1st of July. Sid, who should actually be having this restructuring conversation with their accountant this year, not in 2028 when it's too late to plan it properly?
A lot of businesses that have been trading out of a trust, those are the ones that are going to be mostly hit with the changes to the minimum 30% trustee tax. And, it's also the losers out of that are the ones where they were splitting income to beneficiaries under the 30%, because if the trust has a minimum 30%, no matter how low or how high the income tax rate for the beneficiaries are, that 30% is going to apply. And that 30% only applies to, that 30% applies to any income that the trust receives. What it's really done is killed the structure where it's a trading company, a trading company held by a family trust with a bucket company as a beneficiary, because as we know, non-individual beneficiaries are going to have to pay tax again. And those tax credits of the 30% won't flow through to them. Effectively, if we're looking at a $100,000 gain coming through the trust, 30% paid there, 30K, 70K going into the bucket company, and then another 30% paid, 21K, you're effectively paying $51,000 on a $100,000 profit. So that's killed the bucket company. But the individual beneficiaries that are still going to receive distributions through a trading trust are still going to get that 30% credit. So no real detriment if you're above that 30%. If you're below the 30%, that's when we'd be talking about restructuring.
Right. So if a client comes to you saying that, hey, Sid, should I buy a property in SMSF, trust, or a company? What would be your advice in the current market?
Yeah, so as we said, each of these structures have their own pros and cons. Trusts have effectively been there for the flexibility and asset protection. So with the flexibility of the trust, you can nominate beneficiaries, and historically you could choose beneficiaries on lower income tax rate that would give a tax benefit. For companies, you get the benefit of retained earnings. So as the company produces income, there's net profits, you can retain it within the company to be used for future use. Whereas the con for the trust was that every year if there's a profit, it needs to be distributed.
Correct.
And if it's going to be lower than the 30%, you're sort of caught out of, it's going to be not beneficial for you. But the SMSF, which is for retirement purposes, that's where the most tax effective vehicle lies. Withholding assets for over 12 months, you get it'll be 10% CGT. And then upon retirement, it's 0. So when we talk about a property in these three entities, if there's $1 million gain, the clear winner is going to be the SMSF with a 0% tax rate. Even if 10% tax was paid, that's still $100,000. But if we compare it to a company, that's going to be either 25% or 30% tax rate. So 250K to 300K tax paid. Now let's even take it further back to an individual on a high income tax rate. Say at the top, that's $470,000. So to reiterate, 470,000 versus 250,000 versus 100,000 versus 0. And this change with the SMSFs is going to throw a spanner in the
people
works.
big time.
Yeah.
Absolutely. Absolutely. All right, so we are getting into a segment called True or False. So if I bought an investment property in March 2026, negative gearing is gone for me. True or false?
That's false. The change happened 12th of May, 2026. So March, you're in the clear.
Perfect. The 50% CGD discount is gone completely for everyone.
That's false because the indexation will come in at the minimum 30% plus inflation.
Great. I can no longer buy property inside my SMSF at all.
False. You can still buy resi property if it's paid in cash. All that's changed is the limited recourse borrowing arrangement, which allowed you to borrow to buy resi, but commercial is untouched.
Yep. My family trust will start paying 30% minimum tax this financial year.
False. Those rules come into effect from 1 July 2028. So you still got time. And we've seen a lot of business owners using that to try and benefit mostly from the performance of their business and trying to get as much out now before those deadlines.
Yep. Buying an established property today means I can never negatively get this property ever.
False. You won't be able to get that short-term negative gearing in each year's tax return, but upon sale, all those carried forward losses that have built up while it's in a loss-making position, you'll be able to offset against the future sale value.
Yep. Commercial property LRBAs inside the SMSF are also banned.
No, luckily they didn't touch that one.
As of now?
Yeah, as of now. We'll see.
Yeah. Nobody actually knows what counts as the new residential dwelling for the exemption.
False. True, false. There are some hints that, there are a couple of considerations that no one has lived in that dwelling before. And if it's a knockdown rebuild, then you need to be increasing the number of dwellings for that property to apply.
Perfect. Sid, we are going to get into the hot seat now. Last 45 minutes, we have been going through a lot of information, but this is a hot seat. So it's just a quick question and quick answers I need from you. Okay. So it's this or that. Personal name or trust for your next investment property?
Trust.
Negative gearing, good policy or tax rot?
Good policy, I'd say, in some cases.
Yep. SMSF property, smart strategy or overhyped?
Smart strategy.
Residential or commercial in 2026?
If you can get it within the window, resi. But then if barring that, then only a commercial.
New build or established after this changes?
New builds after 1 July 2027 to get that negative gearing. But case by case.
Hold or sell your investment property right now?
If it's a dud, you always sell the duds.
Yeah.
So it depended on the property.
Yeah. Australian property is pretty forgiving.
Yeah.
So if you're purchasing at the right locations, it'll do well.
I think high density can be fraught, but the right property can make all the difference.
Yep. Accountant or financial planner, who's more important for an investor? I know you're going to be biased, but let me ask you this.
We love financial advisors, but I'm biased as an accountant, so it has to be accountants.
Fixed rates or variable in 2026?
It depends on the strategy, but for certainty, if you want certainty, fixed. If you want to play around with optimization, then interest only.
Property or shares in this new tax environment?
Different cases, but I don't know. There's always opportunity in both, and of course the cost to get in is a main factor. So property requires a lot of deposits and upfront money. Shares you can eke into it.
Right. Labor or liberal? Better for the property investors.
Well, definitely whoever treats us best.
Okay. All right. Complete this sentence. The biggest tax mistakes property investors make is
not consulting the right advisors for their major transaction.
Negative gearing was always
useful, but now that it's gone, different strategies have come into place.
The SMSF LRBA ban will
reduce the ability for mums and dads to get ahead.
In 5 years, Australian property investing will?
I wish I had a crystal ball, but hopefully some of these changes could be backtracked. But Australia property, everyone wants to live here, right?
As an accountant, the one deduction most investors forget to claim is?
The depreciation schedules.
If I could change one tax law in Australia, it would be?
The alcohol tax, the economy is built on experience. Like people want to go out, people want to have fun. But if we're making it more difficult for small businesses, restaurants, bars to make a living, where are we going to go out when we want to?
Yeah. Most overrated tax strategy right now.
Negative gearing.
One person every investor should follow.
Oh, yeah. Ask financials with Amol, of course.
Perfect. Should the CGT discount stay at 50%? What are your thoughts?
I think, I think it would have been fine to make that change in isolation, but with negative gearing, SMSF, CGT, all those changes at once, it's a big hit. And I don't think that change should actually happen because the 50% CGT is only one-sided. It's only on the gain, but you don't get any concession if it's a loss. You get the full loss. So I'm not happy with that change.
What type of client should never invest in the property?
Clients that can't service the loan. You don't want to be caught in a trap and be stressed beyond belief and then end up in dire straits.
Will this tax changes survive a change of government?
If there's a change in government, I think there's going to be a strong fight to overturn it. But historically, I don't know if there's been much of a overturn previously, but let's hope it does.
Perfect. Last one, what's your coffee order?
Cappuccino, 1 sugar. In the afternoon, piccolos.
Perfect.
Yeah. Amol, as a broker, with the changes in the LRBA and the SMSFs, what's your take on it? Is it good? Is it bad?
This particular strategy was for the mom and dad investors, and government has kind of taken that. So it is not a great outcome for the mom and dad investors. But see, investors will always find a way. Potentially what I see is that a lot of developers or different funds will come together. People will invest in that fund. So they'll always find the opportunities to invest. Yeah, that's what I see.
Absolutely. That fund, like pulling together and getting that fixed trust underneath to be the investment vehicle is always going to be something there. So Amol, with these changes with the LRBA and the 45-day window after royal assent for these changes, is there enough time to get a property transaction in an SMSF in time?
Yes. So the most time it takes is to transfer the funds from your industry super to your SMSF and get your bare trust, your trust deed, everything ready, which usually takes time. But if that's been taken care and if SMSF is the right vehicle for you, from the lending side, we can get loans approved within the time frames. Not an issue.
So with the changes in the LRBA and SMSFs, the 45-day window takes us to around mid-August. What would be a date that would be too late to get the transaction successful? So when should they be contacting you or your advisors? What date is that?
10th of July is what we are advising all the customers that they should get everything been sorted out by so that we have ample of time to get things sorted from the lending side as well.
And this is the last chance potentially to get a property with borrowed funds in an SMSF.
That's right.
It's pretty critical.
Yep. But at the same time, as I said, SMSF is highly regulated. It's your retirement fund. Make sure you're buying a right asset and not just buying for the sake of buying.
And speaking with the right financial advisors to make sure that it's
you need a
suitable.
good team around you, good accountant like you, good broker like me, potentially a buyer's agent, or if you're doing it yourself, make sure you're looking at the data and not just buying based on emotions.
Excellent advice, Amol. Thank you.
All right, Sid, this has been the most important conversation I've had on this podcast. Before we wrap, if someone's listening right now, and if they're confused, maybe scared about what this changes means for them in the financial future, what's one thing you want them to advise or hear?
Don't put off the conversation. Now is the time to take action. When the window closes, it might be closed for good. Getting a property with borrowed funds in an SMSF looks like it's disappearing. Speak with those that you trust, the advisors that know what they're doing and have done it before. So certainly, Amol at Ask Financials for the broking aspect, and the team at Lucent Advisory Group to get your structure right and make sure you're making the right decision.
Perfect. That's Sidney from Lucent Advisory. If you need a property-focused accountant who's actually stays ahead, that's for you.
Thank you so much, Amol.
Thank you, brother.
Yep.
This episode has you thinking about your property, portfolio, and their lending structure. Here's the reality. This tax changes affects how your loans should be structured. what worked last year might not be the best approach anymore. At Ask Financials, my team and I are across these changes. We're helping investors restructure their lending to align with the new rules. Book a free 15-minute strategy session. We'll look at your current position and tell you what needs to change. Links in the show notes. Share this episode with every property investor you know. They need to hear this. I'm Amol Khuntale. This has been the Investor Seat.